107 Light FM. There's the B-52s and Love Shack. It's Doug Reese sitting in for Morning Dave here on your Monday morning, 8:39 now, and it's that time of the morning where we check in with our good friend Phillip Statler from Statler Financial Services. We'll get an update on what's going on with the financial markets and what we can look forward to this week. Hey, Phillip, how are you this morning?
Hey, Doug, I'm doing well and glad to be back with you. I know Dave's enjoying a good round of golf this morning and a tournament, so glad he could get away. Hey, we started off, and we'll look back at Friday first, because Friday was really a pretty good day when we look at the markets as a whole. We had the Dow Jones Industrial 30 was up a little over 0.6%, $222. We have the S&P 500 up, getting close to 1%, up $40. And then we have the NASDAQ up almost 1.4%, or $84. So some good numbers across the board when we look at Friday's close. And actually, if you look at last week, it was the best week that the markets have had in 2023. And so I thought I'd look at those returns real quick. I got those pulled up here. So the Dow Jones Industrial 30 was up almost 3.5% last week. The S&P 500 was up 4.8%. And I don't have the NASDAQ as a whole, but the NASDAQ 100 was up 5.6% last week. So some really good numbers. And let's don't leave out the Russell 2000, because I guess you'd say it was the big winner, up 7% last week. So we had some huge numbers, but let's remember now, the last 3 months, we've seen a decline, right? The markets have been down. They were in correction territory. And so now we're seeing a bounce back from where we were at that point in time. And so that's kind of good to see. Before we went on there, you said you hope it kind of hangs around. And yeah. I wish I could say that most people think it will, but I'm not so sure. I was reading an article by a strategist at Morgan Stanley that says that the rally will fizzle in a week or two. So enjoy it while it's here, because he doesn't think it's going to continue. I thought that was somewhat interesting. Not much. We got a lot of earnings coming out today, but a lot of them are not coming out until after the market closes today. So we're really sitting here with not a lot of earnings potential. Same thing for economic news. We don't have really anything coming out from an economic standpoint today. Now, we do have tomorrow, they talk about the trade deficit. Wednesday, we get some wholesale inventory numbers. Thursday's the normal jobs day. And then Friday could be interesting, because we got the preliminary number for the consumer sentiment that comes out about 10 o'clock on Friday. So not much in economic news either coming out this week. So it's, though I will tell you, there's a lot of earnings. There's like 290 coming out today, 381 tomorrow, Wednesday, Thursday. It's like over 500 on Thursday and Friday. So some big numbers coming. We just not much happening this morning. I want to talk about a couple things, though, that I did see. Is that Citigroup, one of the top banks, they have struggled for a time period here, and so they've gone through CEOs here for the last 5 or 6 years, pretty regular. And so the new CEO, she's been there since 2021, but she's working on an overhaul of Citibank. And so they're calling it the Project Bora Bora. And she actually sent out a memo that was, I'm going to say, kind of scary for employees, because she basically said, we're going to have to say goodbye to some very talented and hardworking colleagues, in a memo she sent out. And so the expectation is that there's going to be at least a 10% reduction in employees at Citigroup. And that would mean a loss of somewhere around 20 to 24,000 employees. They're going to get rid of their whole regional manager position throughout the whole company, it sounds like. So a lot of folks on edge that work for Citigroup. The other company that not really earnings call, but some updates from Berkshire Hathaway. They're looking at their cash. Their cash continues to increase. At the end of September, Doug, they had $157 billion in cash. Yeah, just sitting around. But their insurance sector is doing well. You know, they own Geico. Geico had a really good profitable quarter, so that helped them out as well. And so they took an investment loss though, because they when it comes to investments, let's think about Berkshire Hathaway. A lot of folks don't understand this, but Berkshire Hathaway owns 100% of a lot of companies. You know, Pampered Chef, Geico. There's a onslaught of companies that they own outright, not traded publicly. They own 100% of them. They have an investment portfolio that invest in about 5 or 6 different stocks, and that portfolio was down about $24 million this quarter. So they still not feeling sorry for them with the amount of cash they've got sitting in the bank. The Dish was one of the companies I could find a report on. They missed earnings for this last quarter. They were expected to come in at about 25 cents a share gain. They actually lost 25 cents a share. So exactly the opposite of what was expected of them. And to compare that to the same period a year ago, they made 65 cents a share, same quarter last year. So they're suffering today because of that. So their stock is dropping a little bit. Interest rates, if we look at interest rates right now, they're still trending down. The 30-year is well below 5% at 4.8. And so that's some good news. Obviously, short-term rates are still ranking high with the 12-month at 5.3%. But everything else is beyond that is in the 4%. And that's kind of a change over the last 2 weeks, because we did see those numbers up in the 5s just recently. So as we look at where we are and where we think we're going to go today, we've got a little bit of green ink, not a whole lot, but green's better than red as we start out the week. Right now, we've got the Dow 30 basically up $24, less than 0.1%. S&P 500 is up a little shy of 0.2, up $7. And the NASDAQ 100 is up almost 0.25 point to $31. So everything's in the green barely. On the other side, we've got silver flat, gold down 0.2%, and crude oil. Crude oil is at $81.38. Now it's up at 1% from Friday's close, but it's down about $2 from where it was when Dave and I talked last Friday. So that's some good news heading there. And gas prices have been trickling down too. I've noticed at the gas pump. As we get ready to look at Europe, Europe is a mixed bag with nothing off one way or the other. Asia is all in the green. The Nikkei is up 2.3% this morning, and the Hang Seng's up 1.7%. So some good numbers on that side. Then we look at so that's kind of where we are around the world. We'll have a bunch of earnings should be coming in for tomorrow, and we'll talk about that and more when Dave joins us then. Don't forget that there are so many things in this world that we cannot control, but you can control the amount of risk you have in your current portfolio. You need to know what that risk is, and you need to know how much risk should be there based on your current circumstances. And that's why we developed the Core Retirement Design. Give us a call at 863-382-0037 to schedule your core retirement analysis, and then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730, 95.3 FM.
All right, Phillip, thank you for the update. Dave will be back tomorrow, so the two of you will be back in the saddle tomorrow, so to speak. That's Phillip Statler from Statler Financial Services with our market update. You can.
And folks, again, I want to thank you for joining us, and I hope your Monday gets off to a great start. Join us again tomorrow, same time, same place. Until then, have a great day. Bye now.